everyone, this is Anne from KYA Real Estate, and today we'll be doing a new podcast series whereby we'll be talking about all the new the myths, misconceptions, as well as our experiences as real estate agents in Singapore. So here we have Kenneth, the founder of KYA Real Estate. We have Nicholas here as well, and we have Agent S here, which is the secret weapon that helps us to do all the analysis as well as the price matrix. So today we'll be talking about new launches as well as investments.
With so many launches, all right, coming up right now, and of course, most of them are in the CCR region, right? Even RC also coming out a few. I think this has always been a very common topic, very hot topic, I would say, right?
Yeah, and I think with the age group nowadays, everybody have a certain budget as well as pay. So I think this is something that we can talk about also. I have a few clients, they have a budget of about 1.5 mil and maybe probably like pay is about 10k. So I think they're always asking like, hey, should we go for like new launches or should we go for like resale? So what do you think?
I think it really depends on what is their time horizon. If they are looking for a place to stay immediately, then of course resale is the way to go. 1.5 million is kind of not here, not there, I would say, in today's market if you're looking for new launches. Because for 1.5, you can probably easily get a 2-bed, 1-bath. But I think it really depends on their individual immediate needs. Let's hear from our Agent S.
Okay, I think with like what Nicholas mentioned, I think we've got to see what the person time horizon is. I think 10k salary is a good amount, but I think something to consider is whether he sees his cash flow as something constant. Because if you're talking about, say, buying a resale unit, the cash flow is something that you're stuck with for the next 3 years. While, let's say you're going for a new launch, like what Nicholas mentioned, it's going to be a progressive payment. Just based on what you share itself, then it's a bit hard to determine which one they should go for. So I think that's something we probably got to deep dive a bit when we discuss with our clients.
So I think nowadays, right, we are serving a lot of clients whereby their budget is about 1.5 mil with about 10k pay range. So how much do you think 10k pay range can actually get us in terms of like loan amount?
I think now the stress test rate is about 4%, right, with the banks.
Yes.
With that, how much? About 1 million?
1.2 lah. You think it's 1.2, but of course I think ultimately there's still other means to increase your loan, right? We all know pledging and unpledging. Ultimately it really depends on how much cash flow you have. Then how to correctly utilize the funds to maximize your benefit. I think that's the key thing. Correct.
Interested to know more?
Yeah. I think as every agent, we do come across a lot of different scenarios. Like for example, this person with 500k cash and this person with 300k cash. Their flexibility in terms of how far can you stretch may vary.
Yeah, that's true.
Correct. But not many people, I would say, are very good. In fact, even agents, sometimes we are not very familiar. And some even do half show funds, half pledging.
Okay.
Yes, correct. So that in that case, that's why we work alongside a lot of brokers, right, to give us what's the best value that we can provide to our clients.
Right.
Or
let's say you all have a 10k salary. Then what will you all try to go for?
For me, I confirm go new launch.
You go new launch.
Because I think firstly it's because I don't, as in right now I'm still staying with my parents, so in a way whereby I don't need a flat right now.
Yeah.
And I feel that new launches is always the 赚钱 one. To me, as long as you don't buy the wrong
But I think
product.
getting the right new launch is going to be
Yes,
key,
definitely,
right? Because not all new launch probably going to make money. So
and one thing that attracts me is that everybody is at the same starting point.
Right.
Yeah, so I think that's the main thing.
No one will sell at a loss in Singapore, right?
The risk is different. The risk is different because today when you're buying a resale, you buy in with the fact that you are accepting risk. I will always tell my client, you're buying in with an accept. Like I would say, how do you decide if this risk is calculated? Like for example, be it 2-bedder, 3-bedder, you ask yourself, compared to the first owner, how many has transacted since TOP? Then roughly that will give you a good gauge. If you're buying into a project, for let's say not many people have transacted, then how you expect to have that capital appreciation? Because other people can sell at your per square foot, the one that you bought in at. But you cannot
just because they got in earlier, they got a cheaper price, right? Yeah.
But then again, like what Anne said, it really depends on whether or not you have the luxury of having a place to stay. Correct. Because that will affect a lot of things.
Because you might still have to rent somewhere else with family, and then you maybe don't like the location, stuff around that.
Actually, the biggest counter, or rather the biggest concern that a lot of people have with regards to renting, right, is I cannot do anything that I want to the house. I get that often. Like I want to install this clothes hanger. I want to go and drill a hole in the wall. I can't because it's tenanted, ma. Right.
So you don't feel like it's your home. You don't feel like it's your house,
and you probably have that how do I say, fear that any time the landlord just tell you, hey, I need to sell my place.
They cannot kick out.
Yeah, it's possible. I mean, if it's a private condominium or private property, you can still sell with the tenancy. But HDB you cannot. It has to be vacant possession. So that's one of the biggest concern.
But to me, I feel that even if I buy a new launch and if I want to have a place to stay, right?
Yeah.
Because if we were to calculate it out, because it's a progressive payment in a way, so I still get to have the luxury of staying at a place whereby maybe I don't have enough money to, for example, buy some area near town or like Kallang, but I get to stay there with the rental that makes sense, right? Then with that 3-4 years, I can actually get the luxury of staying at where I want before I moved into the new launch that I bought previously. So that's something that I considered before.
I think we also have clients that like to try out different places stay
Before
at
they
different
settle
places.
down,
Then before
right?
they find a place to actually stay full time,
Yeah.
right? Is to try around. Maybe every year change. It's a bit mafan lah, but I think
But some,
They
there
get
are
to-
some really like this kind of 我这边住不爽，我就换一个地方咯。Correct.
yeah. And you have the flexibility. Let's say you suddenly in 1 year you want to go overseas, you want to stay overseas for a while. Then your new launch just continue progressive payment, right? You're
Correct.
still going to get that investment yield come in.
And because nowadays there's this very common, I would say, term, we call it home investment. I want to stay in a place I call home, yet it's a form of investment for me. So basically, long story short, I want to stay somewhere that I love to stay and I also make money. But we all know this sort of thing. Really, it's true. It don't come across. I mean, it's not easy to find a place where you love to stay and still make money. Let's be honest. Then that's where everybody's like fighting with themselves. How like that? And that's why there's this new method of we go and rent somewhere where we love to stay. We can always change and then buy somewhere where it makes money. But the key thing is that not every project makes money today.
Yeah.
Honestly.
So back to the topic about 1.5 mil, right? Nowadays, what do you think we can buy with 1.5 mil? Should we still go for 2 bed with 1.5 mil budget? Should we still go for 2 bed? For example, 2 bed, 1 bath, 2 bed, 2 bath, new launch, or you think we should go with a 3 bed resale? It really depends on your needs, definitely lah. But if
Yeah.
you're looking at investment wise,
What's your take?
Go for new launch because, like you say, everybody goes in at the same price level. Yeah, and nobody wants to lose money, right? So you have that safety buffer over there.
correct. So my mentality also, for example, Springleaf, right? 900 plus people are buying the new launch. Definitely cannot be 900 plus because they also 钱嘛 in a way. You get what I mean? So everybody want to make certain amount of money, but definitely it depends on what is your entry price also. That will make your exit strategy a lot more easier.
No, but I just feel that generally resale you still can buy. But you must make sure that wherever you go, the concept to me is the same. Wherever you want to buy, is there a comparative analysis nearby? For example, if I were to buy a 3-bedroom resale, as compared to a new launch nearby, if I have at least 800 per square foot difference, comparing to the new one, for 1,000 square feet, I'm 800k cheaper. Yes, I'm older, but I'm also 800k cheaper. Then is this a good investment opportunity for you?
Sounds good.
And let me tell you, there is such an opportunity. If in case we are in Singapore,
I think I know where.
I know where.
yeah,
You know where?
I'm sure if you guys before. So
Yeah.
there is a place in Singapore. Okay, we don't name projects. Okay,
Yeah.
but transacted about 2,002 per square foot for new launches, and nearby I can find 1,002.
So which one will you
1,002.
buy?
1,002 to 1,003. You see, so even 1,002, 1,003, 8 years, I say 10 years difference. Okay, all right. AJS always say a year we say 40 per square foot difference. So 10 years is 400. 400.
Yeah.
So 1,002 plus 400 is still 1,006. There's like highest transacted. Minimum average 2,000, highest 2,002.
That's in the new launch market.
Correct.
And
So
considering this new launch, once they actually go to resale market, people want to make a profit.
Correct.
So the 2002 going to sell at 2004, 2005.
Correct.
Then that gap would naturally close up eventually.
And I'm just 1,006.
That's the $800 gap you're talking about.
Correct. Correct. So that's a part. So I mean, what I'm trying to share is that I always tell my client, doesn't mean that new means you must buy. A lot of people tend to jump on the bandwagon. Let's be honest. Alright. So I mean, yeah, that's.
I think I'm on the same camp with Kenneth, right? If it's for me, when a 1.5 million, I would prefer to go for a resale 3-bedder. And the reason is because I think in recent years, we are seeing ever since COVID, more people are moving towards 3-bedder. And at least for me, I feel that then finding the right resale in the current market is going to be key in terms of whether there is that supply demand coming in, is there a lack of supply in this area, and I'm able to find that 1 or 2 gems in this area. And then essentially there would be say new launches coming up to like what Kenneth say, right? To actually prop up your price, there's a huge gap difference, and then you can see that resale appreciate. So personally, I would probably go for a 3-bedder resale. Either that or I like the new launch idea. But if I can, what I'll do is, see if I got ways to increase my loan amount.
Right.
See if I got ways to borrow money. Say 4 years later, I'll return you with more profits.
Yeah.
Kind of thing, and go for a good new launch. I mean, not all new launch can be gone for, right? If the gap between the resale and the new launch is very close, then of course the new launch will be the better option to go for. Then that's when I can see how I can move towards that. Yeah.
What about you? Will you choose a 2-bedder new launch or a 3-bedder resale?
You mentioned new launch right just now.
For me, it's new launch lah.
Investment point of view, new launch. But because I have kids, I need a space. So I have no choice but to go for a 3-bedroom apartment. But of course, it depends on the location as well. Yeah, so I may also consider renting and then getting a new launch.
Okay.
So we have clients that always wanted to go for new launch, definitely. But new launch,
Yeah.
it comes with risk lah, which is like you have to go for balloting number, which we know is not easy,
Yeah.
right?
This one's a high attack.
Yeah.
We've just been through it, right?
Yeah, just been through it. So for Springleaf, there is about 1,900 plus checks. Then in the end, the clients got about 1,600 plus, which means it's technically like a no-go already in a way because we are
Right.
looking at 2-bedders with like a nice view, etc.
And there's only 900 units, right?
Yeah, so it's very difficult. But then what about post launches? Do you think that we can still find gems in like post launches or not?
Definitely. I definitely feel that you can still find very good buys in the market. Because the thing is that when we do analysis today, this is my take we don't sell based on future price, right? Or rather, you can also sell on future price. But the thing is that if I were to sell you a product, based on the future price as well as based on current price, which one do you feel safer?
Something that has a track record, current price definitely.
Correct. So there are also a lot of launches out there. You can still find good one. But of course, that's why we have our secret weapon here. He's the one that has been doing a lot of analysis for us, and I've used the kind of preparation that we have done, and the clients really, really like what he shared. His analysis is more than what you guys are seeing on the surface. Okay, we talk about, for example, simple things like we want to compare a project, rental yield, which district has a under supply in terms of rental units. All this information you really need to do a let's say per quarter basis, because the demographics will change accordingly. So that was something that client was also quite concerned about. Actually, talking on this, people always ask, when I buy for investment, buy for own stay, for example, do you think rental yield is important or not?
To me, not important lah.
Okay, how about you?
Important.
Important.
Because you may always want to rent it out in future. It's not something that is an immediate need, but it could be in future. So you need to cover that base.
Correct, that's the key thing. A lot of clients out there say, no, buy for own stay lah. Rental not important.
Yeah.
But the thing is, if anything happen in the future, do you want to be able to rent out fast?
Yeah,
Do you want to be
I think rental yield becomes like a backup for you, right? In case, let's say, the whole market doesn't do well,
Correct.
you know that the backup is that you can still rent it and still cover your cash flows
Yes.
for you. So
and
it's a
most
good
important thing is
addition.
that the next group of buyer, if there's an investor, they will definitely bother about the rental yield. Right? Okay.
Actually, going back to the question on then you're talking about post-launch or,
Yep.
or new launch, right? I think what we're seeing in the current few months is that because there's so many new launches, what happens is that people tend to wait out. For example, Canberra Crescent Residence and Springleaf, you do see that if the gaps are so near, developers try to entice by showing very low listing prices. Then people tend to not make the decision until the new launches are out,
Yes.
and that creates a window of opportunity for you to actually choose a post-launch that the hype hasn't been there yet, where all the hype is going to the new launches, and that's when you can start finding gems in terms of the market as well. Yeah.
I think there's a very big misconception, or rather a very big assumption from buyers that buying a property that has already passed its launch day is not a good buy.
That's true.
Right?
If you see past projects like Momentum Park, if you see past projects like Treasure at Tampines, their launch day like 30%, 40%.
They didn't do very well.
Yeah, they didn't do well. And then slowly more and more buyers came in. I think buyers who bought even 1 year later after the launch, they made 400K for just 3-bedder. So that is something that that even in the post-launch market, you can still find gems that can still earn you more than any of the hype new launches.
Yeah, because I have a friend that bought a post launch 2 years after the new launch, and I think right now he is just 5 years into the project itself, and he made about 700.
Wow.
Yeah, so I was like, wow, really not bad. So it's really the project that you have to choose lah, even though it's
Yeah.
like 2 years post launch already.
Right.
I think most of the clients are just thinking that, hey, post launch meaning that I might have to pay a bit more because it's maybe like 1 year ago, 2 years ago. But do you think that's always the case or not? Or do you think developers will be like, hey, because of the SSD that they have to pay in a way, right? Do you think that they'll give discounts as well? Or this one depends on the project?
I think there's two sides of the camps. I mean, one of them is the developers might decide to not increase the price because they are maybe nice or because they want to get more people on attraction. But even if, let's say, you buy 1 year later, what you don't realize is that within the 1 year period, that other buyer would have put in the 300K, 400K down payment.
Yes.
Or you, on the other hand, you could have used this money to go and generate other stuff. At the same time, they also got 1 extra year of interest that they paid for initially and all that stuff. So there's the opportunity cost that you kind of save up as a result of that. So that's something that also maybe you can take into consideration as part of the overall purchase of being, let's say, 1 year later, 2 years later than others.
Agree. I mean, on top of that, there's also developer staging lah. Sometimes when we study, we see like maybe for you are 1 year late, but if the price up is not that bad, I think it's still reasonably,
Yeah.
worth it for us to still enter lah.
Yep.
Correct. At the end of the day, like we enter any post launch, we must always compare to the nearby resale projects and the nearby new launches. So long the price point makes sense, it is a safe entry. Then I think there's nothing wrong going with post launches.
So this question is to Agent S. So how do you determine the undervalued project? What are some of the secrets that you can tell us to spot like undervalued projects?
Okay, so we have a tested and proven framework here in the KYA investment team. We call it the MAPS framework. So M stands for macro. Essentially, if let's say you're buying investment property and you're not sure where in Singapore to look out for, what the macro looks at is to look at, let's say, the supply and demand. So supply is the amount of listings that are available in the market, and demand is the amount of transactions that happen. And why I say that's a proxy for this demand is because when there is transactions that happen, it shows that more people are asking for that specific unit, and that so how a transaction happens is that when buyer and seller meet, if let's say there is no demand, there's a lot of sellers coming in, the transaction doesn't happen.
Yeah.
So essentially then that becomes a proxy for demand. So when essentially then you look at the supply demand ratio in different districts, you can see which districts are better than the others in terms of having high demand. And that's when, if you let's say you don't know which location to go for, that M framework helps you to look at identifying which districts are safer to go for.
Right.
But of course, that's not the only thing to look at. Then A stands for area. So when you look at the area, look at the district. If let's say there's a future supply of like multiple GIS land that's going to come out in the area, then you know that there's a possible for you to be underpriced or undercut by future areas, or because there's oversupply in a specific area. So that's something that you got to, of course, take into consideration when you start buying. Then maybe your time horizon when you buy into this area has to be a bit longer in the area. And of course, if let's say there's transformation in like Paya Lebar transformation, or we talk about say Punggol, Changi transformation, these are areas that governments are putting a lot of fundings to get more people coming in. And as a result of that, you can have higher rental, you can have higher demand of workforce, people trying to move over to this area. And identifying the specific area that has that appreciation value, or in terms of demand, that can help you to know that in 3 years later, in 4 years later, when you sell, there's going to be a huge amount of people coming in. So that's the A. And then price is going to be like what we discussed earlier, right? Entry price is important. Doesn't matter if the area is good, doesn't matter if there's going to be high demand. If you bought it at the wrong price, you probably can't sell it at a profit in the future. So pricing is going to be important, where within the area, identifying whether new launch or resale is the right product to go for. So essentially, if let's say a new launch comes in and is priced exactly the same as the resale market, then you know that, and there's going to be, let's say, a 5-year lease difference. You know that essentially when it comes to the resale market, the gap tends to widen because of the 5 years lease gap, and that's when you know that, okay, the new launch is a better option. Likewise, vice versa, if let's say you buy in the area and the new launch market is pricing at 400-500 per square feet difference, but the lease is only say 2 years, what it means is that then the gap between resale and new launch is wide, and that's when resale becomes a better option, because when it comes into the resale market, these new launchers are not going to sell at a loss. They're going to be selling at, let's say, 200 per square feet higher. Then the gaps become 600 per square feet. But there is a method in terms of calculating what's the per square foot difference. Then you do get 4 years later, 5 years later, the gap starts to close up, and that's when your resale outperform the new launches. And lastly, then we look at S, which is the site. So site stands for like the development. Identifying the right development is also going to be key. Whether you find a boutique project where it doesn't have a lot of transaction, whether you find a project that doesn't have a lot of facilities, these are stuff that you have to keep into consideration when you buy a new launch or even a resale, right? We need to make sure that people in the future wants to enter into your project, because when they come in and they realize that, hey, there's no facilities, then why do I buy a condo? Why not I just buy a resale? And having a project that is, let's say, a boutique, doesn't have a lot of transaction, what that creates is that there's going to be lack of liquidity in the market. It's similar to a stock, right? If there's no liquidity in the market, essentially there's no way for people to price it. And same, bankers also can't give a valuation for that specific unit. And at the same time, because of that, then your price won't start to appreciate. So I think finding all these metrics come together, that enables you to identify whether a project is good to go for. It doesn't matter if it's resale or new launch, both can outperform in the market, and this framework has been tested and proven to outperform in specific areas in Singapore.
So if you are looking at something and you don't know which one to compare, then definitely can reach out to us. Then we can have like our secret weapon here, whereby he can show you all the different analysis that we have done. So moving toward buying a new launch, or for example a resale, should we go for the cheapest one even though you don't like it, just for investment wise, do you think? For example, second floor is the cheapest, but you really don't like second floor. You don't really like the toilet facing, you don't really like how the layout is like. Do you think you should still buy into it or not?
It really depends on how cheap is cheap. The idea of cheap, it has to be relative. What do I say? So for example, if on the second floor, I'm getting, say, let's say per floor jump 10,000, comparing to the 20th floor, all right, I'm at least 19th floor different. Or we say 22nd floor, like easy. So it's 20 stories difference. It's 200k difference. Yes. So then is this 200k justifiable or not? You get what I'm trying to say? Yeah. So I mean, you can also switch another perspective. Today, the one above you are about 200k more expensive. Who is the one that is more afraid? You or the 22nd floor?
But do you think that they have a bigger buyer pool in a way, whereby more, as in most of us, we also know that clients like, as in we all also like unblock view, higher story.
Correct.
So is second floor harder to sell, even though it might be 200k cheaper? Or do you feel that there is still a pool of people that likes greenery, like 看树的?
I think end of the day in the market, there's definitely going to be a buyer for everything. End of the day is the price. If let's say now there's a house that I sell you for $1, you will definitely get it even though you don't like it. You might not even stay in it, you might decide to rent it out, you might decide to use it as an investment, right? But end of the day, I think if you can get something at a way cheaper price than the current market, then people might buy for it. Even if it's not for own stay, even if it's for investment, right? That could be a potential option. But there would still be buyers. I mean, of course, the general market we're seeing is that people tend to want a bit higher floor. In fact, some people like lower floor units. Some people don't mind, let's say, the fourth floor, even though some others might be superstitious. So there are still a buyer pool for that. And if you can get it way cheaper than others, then that would be even more attractive, and there's a potential for higher profits.
Another thing to take note would be the size of the unit.
Okay.
Because you think about it this way, now you said second floor and 22nd floor. Okay, I said today if it's a one bedder, I will tell you to buy the lowest one possible. Who will stay for one bedder? Maybe single, investor. The rental between the 22nd floor and the second floor, how much will it vary by? I say
a few hundred.
Yeah, maybe tops 200-300 long. Alright, but the quantum is different. and because of the difference in quantum, your rental yield is different. Maybe today, if I can find a project for you that can guarantee you say 6%. Okay. The 22nd floor one, maybe I only can guarantee you say 4%, example, right? But when I want to sell next time, the 22nd floor can guarantee the next buyer how much? 3%. But I can guarantee you 4%. So then it becomes very important when you want to market on to sell the place. So I think the idea here is that when we choose a project for a customer, we must always understand how long are we investing for. Like this purchase, the holding period, I would say. Right. So can I say generally the exit is also safer?
Yeah.
Generally lah. Then in between is what? Holding period. How long you want to hold for already?
But actually, there are also abnormalities on the market, like outliers. So I remember for the Ori launch, right? For the 2-bedroom, on the VIP booking day, the first person that went to buy the 40th floor.
Okay.
Yes. So the 40th floor, the top floor unit, right, was sold before the public booking day. And that's about 3,000 per square feet. So if you compare to the lowest floor, actually I think it's like second or third floor, it's about 2,600 per square feet. So the difference is about almost 400 per square feet. In terms of quantum, the difference is 300,000.
Whoa.
Yeah. So the guy was like very clear, like in his mind, the views. So I think like whether or not you want to pay that per floor jump difference, that premium really depends on your angle. If you're going in for own stay, and you don't intend to move anymore, maybe it's a retiree. Right. So they may be happy to just pay that premium for it.
Actually, talking about it, you are talking about the VIP booking day as well as the public one, right? There's actually it depends on the development itself, right?
Yeah.
So we heard about like Springleaf, and we have different stuff about Canberra. I think this is something that clients don't really know until like we share with them. So for example, for Springleaf, right, they are looking at even tenants can book for VIP.
Coco Land.
Coco Friends.
Coco Friends.
They call it the
Coco
Coco Friends. So for example, tenants, ex-buyers as well, then the buyers.
Even if it's 20 years ago also can. As long as you show the SMP.
Correct.
Wow.
That's why we have been asking clients like, hey, you got like, are you like Coco Friends?
I think there's a whole list of developments.
And even if it's like your sisters, your parents, you can be part of the group itself as well.
If my sister buy before I can.
Yes.
I think if your sister is and if your sister is a tenant of like Coco Land for some reason, also can.
Wait, that also can.
I think that one also can. So I'm not sure how the balloting would go for Springleaf, but I think it varies differently from the developments.
Some developers don't even give VIP unless maybe you are working in, let's say, Simlian or the developer, right?
Correct.
So I think this is something to check with like agents if you are looking to buy a new
because you might be eligible for VIP without even knowing.
And this is a very good. It kind of really make or break whether you want to buy the unit or not. Because if it's for VIP, that means you can definitely get to choose and you get a priority over other people.
That little bit of advantage, if you ask me. But even for CCR, Canberra Crescent Resident, there's about 2% discount. I think there is 2% discount from the listing price.
Not for VIPs, but for everyone.
For everyone. Which makes it a bit, interesting lah. I think ultimately, think about it this way, developers are also salespeople. You always have to come up with the most attractive strategy to, I want the project to sell. Correct. But like what Sean mentioned, some developers don't give because they are confident. So when we want to invest in a project, or when as us agents, I think the very first thing we always study is the land price. Because who is the one that is more fearful? You guys buying one unit or the developer building a 300 over unit? So if you think it from that perspective, if the developer is confident to bid this land at this price, and it's not just one, maybe multiple lands, everybody willing, then you know that the developer is very confident. So those are telltale signs for us to also keep in mind.
That being said, just on that note, right, the Bayshore land, developers has bid it at like I think 1,388, which then essentially translates to about close to 2.8 per square feet in the OCR region, right? That's crazy. I think they had like 8 bidders or 9 bidders for that. That shows how much the developers have confidence in the area. Correct. And we also saw like say Chuang Grove, which I think just beside Chuang Park. We also have quite a lot of bidders, and they also bid at I think even higher than Bayshore price in the OCR region. So we are seeing that the OCR prices for new launches are going to hit a new benchmark once this project launches as well.
If today, right, Bayshore is going to be launching at 2008, ideally lah, but but the question is, Bayshore ultimately is an OCR. If let's say Bayshore can reach a new benchmark, then if in the RCR we can still find 2004, 2005 per square foot new launches, post launches, then is it safer for us to go in? Because ultimately when you look at the price chart, there's always a widening and then expanding of the price gap between each region. So what's your take on that?
For me, I go with the views. I like en-bloc. So that's why I feel that Springleaf is nice. So for me, it's more of like the view itself rather than like the region. Because I think Singapore very small, in a way, but if you travel from Jurong all the way to Changi, still okay lah. In a way lah.
So you don't mind paying like let's say 300-400 square feet more in a different, let's say you're in OCR region, you don't mind paying more if you have better views.
For me.
Okay.
Okay. How about yourself?
I personally would go for a safer entry price. I mean, I don't know how many people would be like you that willing to pay more just for views. I think generally people just feel that the mindset wise is that for a more prime region, I should pay more. Then that's also naturally why there is that gap between OCR, RCR and CCR region.
You Nicholas?
I think it depends on whether or not you believe in the East Coast plan. I would go for the safer option. Yeah, because honestly, I think RCR and OCR, depending on which part of RCR you choose, the difference in terms of distance between that development and central location in town is not a very big difference. Yeah, unless you're comparing like somewhere in Marsiling, right? That is really OCR, right? But OCR can also be somewhere in Serangoon, somewhere in Hougang. That's also pretty central, I think. Yeah, so it really depends on location.
That's
of
true.
course, if the gap is very small, then if I don't mind living in the east,
Yeah.
I can go for the East Coast plan.
So moving forward, right, nowadays new launches are all 99-year leasehold or like freehold. So what's your take on that? Do you think that it's still worth it to pay for the freehold launches, or do you feel that 99 is the one that is the way to go in terms of an investment point?
I think firstly is that we're no longer going to see freehold new launches except for en-bloc, because government has now changed towards no longer issuing like freehold land. So every new land that comes to developers now would all be 99 years moving forward. So I think the mindset of, let's say, the generation, say the baby boomer generation, who always say, okay, freehold is going to make money, leasehold not going to make money. We have seen historically where in, say, the past 10 years that freehold has underperformed leasehold, and we have seen where leasehold actually makes a lot more profit than freehold. And in some freehold units, let's say Alexa, for example, which is in Queenstown, the freehold units has made significant losses in some of the smaller bedroom types. So freehold or 99 years, there's a lot of other different factors to look at whether a project or a area is worth investing for. So I wouldn't just base it on freehold or 99 to actually look at which is better. But of course, if let's say all else is constant and these two units exactly the same development, same location, everything, but one is freehold, one is leasehold, and it's the same price, of course I go for the freehold because at the end of the day it's still it's still going to be still freehold. So but I wouldn't put a huge premium to that, seeing how the market is accepting, say, 99 years moving forward. But
I think because we have some clients that is only looking at freehold properties, even though we do show them the charts and all, I think most of their mentality is more of just like, hey, I can hold until the en-bloc. But what do you think the chances are of like holding until the project can en-bloc itself? Do you feel, or do you feel that most of the project can do that as long as you hold long enough?
I think we've seen a lot of projects where en-bloc fail because people keep voting no, even though it's going to make a huge profit, right? A lot of them want to stay because they have been there for like 30, 40 years. So they wouldn't want to take a profit, right? Because the question most of them have is that after I sell this, where do I go? They've been comfortable here for 30, 40 years. So that's something that you're kind of like, it's like rolling a dice. Like you're not sure whether the en-bloc is going to happen, and it might not even happen ultimately.
I think for en bloc, there's a lot of variables that cannot be controlled. So like if you're trying to choose a property for en bloc, first you need to understand who is living there, right? So that is a very key difference, because now with the additional buyer stamp duty for foreigners, if you have a large group of a particular type of demographic, then the chances of you actually going through with an en bloc is very low. Okay, and even then, if you go for an en bloc, you need to set up a committee. You need someone to step up to do that. Are you going to be the one doing that? Then after you do that, you still need to get the consensus to go for the en bloc, and then you need to get, I think if I'm not wrong, about 70%. Basically, you need to get everybody on board. So that's only half the story. Then you put the property out on the market to sell to developers, right? And developers will be comparing your development and also neighboring sites. So if there are GLS sites around you, which one would they go for?
Correct. And generally, it is easier to buy the land from government than to buy from en bloc cases, because
lesser headache.
because basically it's like for en bloc, right? Everybody has a say. Right? For me to sign this petition, what we call it, sign for this en bloc, you must agree to my price. The price meet my requirement. Okay, I sell. So that's why I think sometimes developers do not want to go and go through the hassle just to get this thing done, unless they believe that the potential upside is worth it for me. Right? You can make them money, then they will do it, you get what I mean? But other than that, normally to get directly from the GLS, I think it's easier. It's more straightforward also.
It could be a very long drawn process, like the recent Thompson View collective sale.
Correct.
We went all the way to High Court. So there's a lot of hoops to jump through. I think, if I remember correctly, it only became successful because the government stepped in to give a conservation status on part of the development. So you may need to rely on the government. I mean, so the chances is basically very low. So I wouldn't advise any of my clients to
don't buy based on speculation. Let's put it this way.
Correct. That means so if it's a 10-year, 20-year kind of project that you want to invest in, then definitely 99-year leasehold would
I will go for 99 because ultimately if the 99 can give me a better location. Nowadays, we are seeing the trend, people moving more towards amenities, the location, where it's more convenient for my daily, needs and everything. It can be a freehold price the same, but somewhere whereby it's really, really deep inside. I need to walk in, I don't even have a bus in. Then I can tell you upfront, 99 is the way to go for the same quantum. I may be wrong, but you realize that sometimes for freehold projects, the older ones you see, the number of transactions, sometimes much lesser. Not many people want to sell there already. They buy for own stay one. Right? True. So this is very important. How come price can go up and up and up? It's after transactions. When there's enough transactions to bring you up to the new floor price, then you can appreciate. But if there's lack of transaction, I don't care how big the development is,
Yeah.
there's no way you can appreciate that.
True.
That's true.
I think the idea of that is that if let's say there's no transactions, trying to sell at 200 per square foot higher than what
It's
it
gonna
is,
be very
it's going to be very hard
difficult,
for someone to take in.
Alright.
But if let's say there's a lot of transaction, every transaction increased by 5 per square foot, right?
Yeah.
In 50 transactions, it will become, let's say, 5 per square foot times 250 per square foot increase, right? So in that period, then people are able to accept that 250 gap.
Right.
So having
Okay.
transactions is going to be important to actually see that price appreciation also.
Alright.
So now we have come to the end of our first podcast series. If you have any questions that you want to ask us, you can feel free to, drop us a message or, you can comment down below. So I think the next one we'll be talking about, since it's the 7th month, right? So I think we can talk something about horror stories, haunted stuff, or like myths. Yes.
Yeah, but of course, when
Let us know what you want to talk
You
about.
can
We
let us
discuss.
know.
Yeah, we can
Alright.
debate also next time.
Yeah. Then you can join us also.
It's a guest appearance.
That's the end for the first episode. So we'll see you next time.
Okay, bye-bye.
Bye bye.
Like our content? Subscribe for more.